Welcome to DWS Market Update. Once a quarter, my colleagues in research calculate the expected performance for various asset classes over a 10-year horizon. While coming up with 10-year forecasts may meet some skepticism, historical data suggests a greater confidence in predictions over a decade compared to those over shorter time frames like 1 or 3 months. My colleagues derive the expected returns of financial assets from 3 components. The first one is income, the second one is growth, and the third one is valuation. In the case of a safe fixed income security, like a government bond, with a maturity of 10 years, calculating the expected return is an easy exercise. The income component corresponds to the regular coupon payments. The growth component is neglectable, as coupons are usually fixed and don't change. For stocks, however, that's different, and the growth component needs to be considered. It consists of real earnings growth as well as an inflation component. That leaves us with valuation as the third factor. Once again, when dealing with bonds maturing in 10 years, it's an easy exercise, as valuation doesn't matter when the bond matures. The expected return of stocks, however, does depend on the valuation in 10 years' time. Speaking about stock valuation, our equity strategists claim that today's valuation does a poor job in predicting short-term price changes. Historical data, however, shows that there is a better statistical relationship between today's valuations and the performance of stocks over the subsequent 10 years. Given that today's US stock market valuation is above the historical average, that explains why the expected return for US stocks over the next 10 years of 6.1% is lower compared to the past 10 years. European stocks, where the expected return is about 6.2%, align closely with the past decade. Meanwhile, rising yields have made bonds a more promising investment again for the next 10 years than they were for the previous decade. That concludes today's update. Thanks for watching and goodbye.